Afternoon, everybody. How we doing? All right, let's jump into this disclosure so we can look at these earnings reports. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same as yesterday. I got into and out of maybe 5 positions or something like that today, but at the end of the day, the position disclosure is the same. Popping over to the market and to some earnings reports. All right, so we've got Google out. It's a little bit all over the place. It was down, it was up, it's back down. The numbers look good. This is a little bit exciting if it doesn't do anything on good numbers, because that's kind of what I'm calling for. Numbers look good. I don't think there was guidance out there yet. Let me scroll up here and look at these numbers. All right, so Google Cloud Rev, the nice little beat, that is definitely an important one. Coming in at 10.35 billion versus estimates at 10.09 billion. Ad revenue, I won't even bother reading the numbers out loud. Ad revenue is a small beat. YouTube revenue is a small miss by like 0.3 billion or so. Second quarter revenue overall is a little bit of a beat. Nice beat, 0.4 billion or so. Other bets I don't think matters. So yeah, I mean those numbers look good. Those numbers look good. They beat on everything here except for the YouTube revenue numbers, and they beat on their numbers. It looks like generally. So those are numbers that I would consider to be good, but not like anything in here that's getting me super excited. Again, we haven't seen guidance. We haven't seen if they're going to announce a new crazy buyback or anything like that. But the initial read here is that it's a good report, and the stock is trading basically nowhere on it. It's down, looks like $1 after hours. So far in line kind of with the thought process and thesis, at least that I have coming into earnings. Tesla here trading lower. Tesla looks like it's off about, I don't know, $8 or something from where it closed. Tesla revenue beats. Operating income misses. Still sees notably lower volume growth rate for 2024. It's not great. They're focused on company-wide cost cutting. Their gross margin beats. I do like when I like a gross margin beat. Their free cash flow is a fairly nasty miss, 1.34 billion versus estimates of 1.92 billion. They plan for new vehicles. Their plan for new vehicles remains on track. Tesla expects a sequential increase in production in the third quarter. Semi-factory on track to begin production by end of 2025. Cybertruck production on track for profit at the end of the year. Yeah, I'm not seeing anything great there in this Tesla report. It looks just like a continuation of the slowing growth that we are already seeing, and that's kind of been the bear case. You can't be a growth company with a massive valuation and have slowing growth and maintain that valuation. That's why the stock has done nothing this year, and that's with that really big rally that it had pretty recently to get it back to flat on the year, flattish on the year. So yeah, Tesla not looking great. What else do we have? We got Visa. Visa's an important. Oh, Tesla making new lows even as I'm saying that. It's weird. Price improvement. I just got. Give me one quick second here. It's 36. Okay. Visa. Visa's out. What's Visa doing? Haven't looked at it. Visa down. Third quarter adjusted EPS beats. Third quarter EPS misses. Not seeing any other numbers on Visa at this point, but it's trading down. Yeah, TXN out. Give me a second here. Keep getting filled on this other name that I'm trading. It's a secondary to ENPH that I'm in. All right. TXN out. I'm just going to use this chart. TXN trading higher. I feel like that never happens on their earnings reports. EPS beats, revenue beats, guidance looks kind of in line with the midpoint of the estimate. And revenue, same deal, looks kind of in line with midpoint of estimate. So TXN up. I call it the forgotten semiconductor sometimes. Though look at this. This thing's kind of broken out. I don't really ever look at this thing. This thing had a breakout above 200 recently. It's interesting to see that from TXN. And then finally, does anyone have those ENPH numbers? Were they posted? It's just one I would want to take a look at for selfish reasons, because I'm in this SEDG, which is moving on that. Not seeing it in the VTF. ENPH is trading up a few percent here, trading around 108. So, not bad. Okay, so let's continue to keep an eye on these earnings names. Google is trading a little bit lower right now. Tesla is continuing to fade. It's actually just trying to create a little bit of a hammer doji, a little downside tail right now, maybe trying to give an oversold bounce. I believe the measured move on Tesla would be down to somewhere like 226-ish. So we haven't fulfilled that full measured move. And for Google on the downside, it'd be like 171, I think. So we haven't fulfilled the measured move on either of these major earnings reports at this point. But they are both trading a little bit lower. We'll see what happens with the conference call. We'll see what happens if we can get some guidance, because right now there's not any guidance. And again, if anybody's got any ENPH and could post it, I would appreciate it. Maybe it was already posted and I missed it. All right, let's hop into the meat of our meeting here. So the SPY, this includes after hours action, is down 0.2% on the day. It's pretty close actually still to where it closed. It's down a little bit more. So we closed down. It looks like small red in the S&P today. The NASDAQ is also, yeah, it's down a little bit from where we closed. Actually, no, it's trading right about where it closed. It looks like it's even up 20 cents. So even with the how is the NASDAQ up 20 cents if Google and Tesla are both trading down? Surprised to see that. But even with that, it's down 0.3%. And the IWM was once again the big winner, the big leader, up 1.1%. And looks like it's also trading higher, like 15 cents or so after hours. So the rotation trade continues. It's been pretty solid. Pre-market this morning, the IWM was down 0.5% when we were doing the morning meeting, and the Qs were small green. Similar to yesterday, pre-market yesterday, IWM relative strength. IWM was giving relative strength. Sorry, I just keep. Sometimes in earnings season, these afternoon meetings are tricky because I'm trading stuff at the same time. Pre-market, the Qs were showing relative strength. The IWM was showing relative weakness. It was the exact same thing as yesterday. Market opened up, and relatively quickly that flipped. The IWM caught up to the Qs, surpassed the Qs, and gave continuation throughout the trading day. Here's your 5-minute of the IWM. You can see the gap down. You can see the initial break higher here for the gap fill at 9:45, pretty decent. Then you can see the break of that resistance, which was also yesterday's high at 10 a.m. And that's when this IWM really started to gain its strength. Had a deeper pullback into 11 o'clock, but it was still just like a 15-minute style correction. You can see that on the 15-minute chart here. Quick tail down to equilibrium, and then kind of continues. Going back over to the 5-minute chart, midday digestion, a little bit of a rally into the close to new highs before a little bit of a sell-off as kind of the MOCs came into the close. So really decent action from the Russell. The Qs basically did nothing. Like I said, they were relatively strong pre-market. and then did nothing. There was this upside tail. I forget who it was. It might have been Roble who called it out, who said, hey, as we're breaking higher here, let's watch if the Qs come back down as like a false breakout for a pull lower. That happened. And then when we broke lows, this market was kind of just pushing everybody out in both directions with the NASDAQ. Break new highs, break new lows, break new highs, and then work its way back down and break new lows again. So Qs did nothing, and the price action on the intraday on those Qs was very difficult. Popping back over to the daily chart to see our daily chart updates, the Qs here are maybe potentially establishing that upside pivot into that equilibrium zone, which is exactly what I've been looking for. This is exactly the area that I've been talking about, retrenching into NASDAQ related shorts, which obviously you have to be a little bit careful of as we have the major companies that are reporting earnings, like Google, which is out right now, and all the rest of them that are expected next week that obviously are going to impact. But if Google's any clue, and it's a little early because we don't have guidance yet, I see Google's green now, trading at 183.50. If Google's any clue, it's going to be pretty difficult, I think, for these Mag 7 stocks to really, really be able to perform on earnings. Thank you, Michael, on the ENPH post. Appreciate that. I'll take a look at it when I'm done with the meeting. Michael, I also sent you an email today, just so you know if you have a second. So that is the NASDAQ, good short in that area. The game plan this morning was to look for that short if we bounce further into that area. That worked out really well. And at the same time, to see if we can get upside continuation with the IWM, that we did discuss that buying 220 in the IWM is a little bit tricky when we had the opportunity to buy it at 216, below 216 yesterday. So you kind of want to have that stock from yesterday as you're getting the follow through. And by the way, when we were buying the IWM at 216 and below 216 yesterday, when we got that quick snapback just to the 80 EMA on the 5-minute, I said, hey, hold some of this position. It's very likely that we could see a move back to the low or even mid 220s relatively quickly in a couple days. Here we are the very next day. The IWM was able to make its way all the way back to 224. Love that type of risk-reward trade. We talked about it in yesterday's afternoon meeting, where you can find the smaller time frame execution setup for the bigger picture daily chart reward. That's exactly what we got with the IWM yesterday through today. Just a phenomenal trade. And at the same time, the pair trade, if you want to call it that, or the rotation dispersion aspect of the trade, IWM getting continued strength, meaning that the Qs have some degree of continued weakness, while the SPYs hold in and don't have big up or down moves, but stay a little bit grindy, kind of continues to work as we were able to build in and add into the short further into that 482 area just to get the rollover into the close, and a little bit of further weakness here after hours. So this just continues to work exactly based on the game plans, exactly based on the thought process. Loving this market, just a lot of opportunity. Outside of that, there were some good day trades today. Some that I was involved in was the CrowdStrike RDR today. I'm bearish on CrowdStrike big picture after what I view as a pretty big fundamental change on their company. But, another down day today. Stocks trading at 260 with the ADMA at 318. Cute little long trade. Gave me about $10 worth of reward off the risk that I put on there. That was a nice little trade. I'm not even going to mention this AZTR that I took a very small lotto-ish buy at $5 in the morning meeting today that, was a total gamble that paid a little bit. Amazon we tried to short. This is worth mentioning. I'm going to circle back to Amazon so we can get into that in a little more detail. Roku was able to make a couple dollars in. NVIDIA we shorted into the gap fill. We talked about NVIDIA, and this is kind of in conjunction with the Qs. If you're expecting the Qs to fail down in that equilibrium zone, you're going to kind of need NVIDIA to fail into its equilibrium zone or into the 125 gap fill area. So that's what we talked about in the morning meeting. I was kind of patient on that trade, waiting till we got closer to 125 to short. I think I shorted 124.50 on the 940 bar versus that 125 area, and didn't do very much. Closed weak, worked its way down throughout the day. Made a few dollars in it, but ended up kind of closing the position. Just I didn't feel I needed it, with also having some TQQQ short that I am continuing to swing. So it's kind of the main updates. Just mentioned that I wanted to talk about Amazon in a little bit more detail. So, you know, a trade that's actually been consistently working for me recently, and it's been consistently working for me specifically because I've not been too greedy. I've been very patient, which is something that Pat's usually better at than I am, and having, you know, targets that aren't too greedy, and really letting the layers of probability come together. I've had a lot of success with day trades on the extension buys and extension sells, very much so on the index level, but also on some individual stocks like Serve a couple days ago. You know, we made some money long, but then each one of these pullbacks I was actually able to capture pretty much perfectly and make really good money on by, again, not being too greedy, not looking for reversals, really waiting for more major extension to put that trade on. So, you know, kind of doing a similar situation with Amazon, and I've spent some time talking about it just recently. When the Qs were breaking down last week, we were able to make money to the long side by doing this same strategy, these cuter long trades, by not being greedy but being patient on the execution, and kind of, you know, trading the little, you know, 10 or 25 cent ranges while you're letting the ADMA kind of resolve itself, letting the extension resolve itself, which means, again, not being greedy and potentially reducing your targets as the ADMA catches up, as the stock gets less extended, and that could potentially lead to a loss. But combining that with kind of a cash flow strategy of buying and selling every 10 or 25 cents while I wait for the extension to resolve itself, I think has provided me a trade that's been 100% profitable over the course of the last couple of weeks. Definitely not, unlike, in some ways, I guess it's like a microcosm of a trade where we do the, you know, $10 extension in the SPYs and Qs to come in on the other side, except you're doing it on a 5-minute chart, and this is definitely not a trade that will give you a 100% success rate over the long run, but the success rate has been pretty good, especially recently. Tried it again with Amazon. One thing that I noted, like, almost immediately when I got into it and I looked at it was, ooh, crap, look at the volume profile on Amazon. When the volume profile stays this consistently large, like, let's look at Amazon yesterday versus today. Look at a normal Amazon volume profile versus Amazon's volume profile for the first, you know, hour of the day. Just it does eventually die off, but look at how much bigger it is compared to here. This is when you got to be especially careful when the volume is this big, because the kind of the math law still applies, where eventually at some point you'll have to get a touch of the ADMA, but that the amount of time that can go by till that happens can be much longer than you expect, and the degree of the move can also be much larger than you expect. So when you're seeing like this really big volume profile, you know that that volume is there because of the momentum that's coming into the stock, which means that if you're looking to go to counter trend on the trade, you need to be even especially more careful on being patient on the entry. It's better to miss it than to be too early, I would say, and then not being greedy at all on the reward side. Because here is a trade that I started shorting at 188. Let me just confirm that price on my other screen here. Yeah, so here's a trade I actually started shorting at 188, actually just under 188. The first time it got up there on this 955 bar. I started shorting it at a little bit under 188. I ended up getting out of the position at 1040-ish, or maybe actually I think it was the 1045 bar, above 188. You know, I think I exited my last piece. Actually, my last piece I got out at 188.01. But I was covering a bunch of stock between like 188.11 and 188.31, really for like a loss on that stock, because that's the same stock that I had started shorting below 188 initially. Yet I was able to finish positive on the trade. And that's because of kind of how I worked the position, and again the fact that when I recognized that this moving average was moving up, I was raising my target with it. I wasn't saying, when I first shorted below 188, I still didn't have a greedy target, but I was looking for a quick snapback down to 187. 187 was my target. If I got to move to 187, I would have liquidated the position. I would have been done with it. Instead, I was able to get this quick pullback to 187.20, and I covered some every 25 cents. I covered some at 187.75, 187.50, 187.25, and had my last bid basically at 187. Didn't get that. Reshorted all that stock on the way up. So basically, kind of working a system of 25-cent increments of selling and buying. So initially, we'll just call it lots. Initially shorting 4 lots, basically. Well, initially shorting 3 lots just under 188, and then getting filled a 4th lot at 188. And then the 4th lot that I got filled on the offer at 188, I bid 187.75. The other 3, I bid 187.50, 187.25, 187. And then I offered out every 25 cents on the way up. 188 quarter, 188.50, 188.75, 189, 189 quarter, 189.50, with the idea of my stop loss, if you want to call it that, being when price touches the ADMA. And again, you do have to be very careful with that, because it could go much further than you might expect. That is especially true. Like, imagine if you tried to do that in AZTR today. Let's take a look at at AZTR. Imagine if you tried to do that in AZTR, because you're like, oh yeah, it's too extended. Actually, this isn't a good example because this thing crashed and it would have worked great. But sometimes, especially with this type of stock, if it's, and that's assuming, by the way, that you didn't get blown out at 12. Or it could have just kept going, a stock like this, because it's super low float. I think it had a 600,000 share float. It's turning that float over. I think it had a 600,000 share float and it did 76 million shares today. This is not a stock that I don't think you want to implement the strategy in that I'm discussing. You could blow up your entire account. It's a little bit safer, though still has some danger, doing it at an index level or doing it on, a massive market cap like an Amazon. But even with that, you still have to be careful when you get this volume profile. That's what I'm trying to talk about. Because even when I entered that position, and it wasn't big, we're talking in lots, so we'll say 4 lots, not a big initial position, leaving myself room to build in as it moves higher. If this thing went to 194 straight up, I might have a problem. And that can especially happen if it's like an earnings report or something like that. So, initially capturing this move down to 187.20 means I covered 187.75, covered 187.50, covered 187.25. I'll bring up my other chart that's got the executions on it. You can see getting that 187.25 fill basically right here. But then I didn't get filled at 187, so I'm reshorting the 187.25 and 187.50. I'm reshorting the 187.50 and 187.75. I'm reshorting the 187.75 at 188, and I'm doing it the same amount of shares each time, if that's your question, David. So let's just assume it's 100 shares, right? So I'm reshorting that 100 shares that I covered at 187.75 at 188. Then I'm shorting 188 quarter. I get a quick move down to 188. I cover that. I reshort 188 quarter. Cover 188. I reshort 187 quarter. I cover 188. I reshort 187 quarter. It keeps going higher. I short 187.50. I short 187.75. I short 189. I short 189 quarter. I cover 189. I cover 188.75. I cover 188.50. I reshort 188.75. Again, just 25-cent increments. Bop, 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 back and forth. If you're doing that on 100 shares, that puts $25 in your pocket every time. So, by the time this, and then scaling up my stop loss, if you want to call it that, or my reward target, if you want to call it that, to the upper band of equilibrium, which is the ADMA. And not getting too cute. I easily could have said to myself, well, now it's 10:30, so I should expect a 15-minute correction. I should expect the move to the 21 EMA instead of just the move to the 80 EMA. That becomes very dangerous. Like I always say, you're better off sticking with the initial game plan that you created for yourself, even if what I'm saying is true. And now it's post 10:30, and I should be looking. You could look for a 15-minute correction in the stock. I don't want to change the game plan of a trade that I already am involved in. So the way that you take a loss in this is if the stock just continues to move up so big that by the time the 80 EMA catches up, you're liquidating the position. A lot of that stock, you're liquidating it at a higher price than you entered at because that target has moved higher. And the incremental fills that you were able to get throughout the process does not make up for the P&L of the loss of the covering based on the target that has actually moved higher. So again, if I shorted a core of 300 shares, I don't remember exactly what price, just trying to look at the red dot here, it looks like I shorted it like 187.80, and then I added 188. I'm taking a loss of, I kind of had some bids scattered out around this 80 EMA to basically liquidate. I'm taking a loss on some of that stock. That's like a 50-cent loss, 20, 50-cent loss on some of it. Yet, the incremental buying and selling of the $25, if it's 100 shares, I'm able to put in my pocket every single time I get that movement, was able to add up to an amount that is more than the loss that I'm taking on the actual initial stock of the trade that itself. So even with this, like I just explained, this is a trade where I am liquidating my core position of a short at a price that's higher than where I entered it. I have decently positive P&L on it because the increments that I was able to make were able to outweigh the loss that I took on the trade. So that's kind of what I'm doing there. This is like, and this, by the way, is not your best case scenario. It's not your worst case scenario. It's kind of somewhere in between. My best case scenario, which has been happening a lot when I've been taking these trades recently, is I short that core position at 188. I get the quick, immediate price correction down to 187. I'm fully done with the name. I liquidated the position. I just have pure positive P&L. I move on with my life. I type up a different stock. Or maybe I go back to this into a next level of extension. That's a lot of what I was doing when I was trading Serve the other day. I was getting my move down. I was covering the entire position. I was being fully done with it. And then I was waiting again for the next more extreme level of extension, which in that Serve a couple days ago was like 50 cents away from the 80 EMA on the 5-minute. And then I would be like, okay, I'm going to do it again. I'm going to reshort it looking for the correction. I'll work the increments, work the increments, work the increments. Bam, got my move down to the 80 EMA. I'm done with the position. There's no extension anymore. Let me wait. And then the extension happened again because the stock was nuts. And I repeated it again. And by the way, the Serve, and this is one thing I'm paying attention to if I'm looking to implement this, I do think is safer than trying to do it like AZTR. Why? Because AZTR, like I said, has a 600,000 share float and traded 76 million shares today, whereas, where's my FinViz so I can look up Serve? I know I looked at it the other day. I know it's a really big float. Serve has a 23.5 million share float. Big difference. Big difference. And Serve was still nuts, right? Where's my daily chart? Serve was still nuts. Serve was still able to go from, $4 to $9 intraday and then be able to go the next day all the way up to 14, where I also did the exact same trade, that extension short situation. So these things can still go crazy even with that big of a float. But what you're probably not going to get in Serve, which can happen to a super short floater, which could be career ending, is like, what was that HKPD or HK? I probably shouldn't have said that out loud. Now no one's going to be able to tell me the symbol. Come on, somebody help me out. I know you guys know. That crazy one that went to like 5,000 or whatever from like $3 or something, and it just had no float at all. Was it HKD? I thought it was a 4-letter symbol, but it could be HKD. Yeah, HKD. This insanity. Don't get stuck in this. Went from 13 to 800 or something. That's career ending. That's career ending if you're trying to do this strategy. This is one of those super duper low floater names that you don't want anything to do with on the counter trend trade of the trade. And that's why, but yeah, VFS was another one. VFS was another one. That's why, by the way, when AZTR got mentioned this morning, this wasn't on my radar. It already pre-market went from $1.70 to, you know, over $5, and was making a little bit of a wedge here at $5. What time is this? This is like 9:15, 9:20. It looks like I entered. So the morning meeting is ongoing. Josh posts AZTR, you know, up a ton, 600,000 share float. I looked at it and I said, okay. I literally said, all right, 600,000 share float with the move it's doing. There's a potential it's an HKD. There's a potential it's a VFS. I don't think that this is good trading. I don't want anyone to think that what I did in this, and it's like my 5th best name of the day. I don't want anybody to think that this is actually good trading. It could be good trading if I was buying the breakout of this wedge. That's not what I did. If you recognize this wedge in this short float name, I mean not short float name, super low float name, and you bought the break of the wedge as a technical trade with a stop loss at the low of that wedge to see if you get continuation on a stock with a 600,000 share float, that's a good trade. That's not what I did. I said, oh, Josh said it's got 600,000 share float. It's up a ton on the day. I'm just gonna take the offer on a very small position and see what happens, knowing that when I'm in names like this, I'm doing the morning meeting at the same time, I can't even properly manage it. So I just like bought a little bit and threw some offers out. I think every 50 cents. You know, I bought just above 5. I put an offer out of 550, 650. Didn't have an offer out for the last one. Wasn't even watching it. Saw that it got halted, unhalted, was at 9, some $4 in the money, and I'm just like, all right, I'm just hitting the bid, I'm out. That's not good trading. That's literally me just saying, hey, you know, let me gamble here a little bit with the risk reward. If it really runs like it did there, then, you know, I might be able to make a little bit of money compared to what I did otherwise. But really, what I wanted to just review was this Amazon trade, and a lot of excuse me, what I personally have been doing recently that has been making me money. Because like I said in another afternoon meeting recently, it can be really difficult sometimes for me to talk about specifically what I'm doing with my own trading, because what I'm doing with my own trading is something that I don't necessarily think is right for everyone to do. But I want to start talking about it, or have been talking about it just a little bit more recently, just to maybe implant some ideas in people's heads of, you know, what you can be thinking about in terms of developing and building game plans, and that at the end of the day, the math is more important than probably almost anything else when it actually comes to trading. All right, I took a lot of time, and that's unfortunate because I actually have a pretty hard, like 4:55 p.m. cutoff today because I have to get out of here and meet someone. But I'll do my best to kind of give some quick answers to questions. I'm seeing that a bunch of stuff came into the YouTube channel. And let me see what came into the VTF, if anything. Start with the VTF from Cameron. When looking at a potential stock, what is the best way to determine the position sizing that is best suited? Great question. Appreciate the question, Cameron. So, position sizing is the last part of the equation. This is really important. Position sizing is the last part of the equation. When you are looking at a potential stock or a potential trade, the first thing you got to ask yourself is, what is my trade? Right? A trade. The definition of a trade is something with a technical reason and a technical out. What is the technical reason why you are buying the stock and think it can go higher? Or what is the technical reason why you're shorting the stock and you think it can go lower? And what is your exit plan for that trade if the trade's not working out? Which most of the time, traditionally, what I recommend is having a stop loss in, You know, if you're shorting a shooting star candle on a 5-minute chart, then your stop loss is the high of the tail of the candle. As just an example, what I just discussed with Amazon's a much more nuanced trade as far as how you're stopping yourself out. I think it's much dangerous for newer entry level traders, and it's not something that I would recommend for more newer entry level traders. For newer entry level traders, you should focus on exactly kind of what I just described. I just gave an example. You're shorting that shooting star candle. Your stop loss is specifically the high of the tail, or you're buying a bull flag. Your stop loss is the low of the flag. So what is your trade is question number one. Question number two is, what is the distance between your entry point for that trade? If I short right now based on that tail top, what's the space risk? Space risk is the difference between your entry point and your stop loss. Is it, you're shorting $25.40 with the stop loss at $25.50 is the top of the tail, you've got 10 cents worth of risk? Or is it $1 worth of risk? Is it a stock that you're shorting at $89.50 and the high of the tail is $90.50 and it's $1 risk? That's the second question. What is your space risk? The third question is, how many dollars of your money are you willing to risk on that trade? $100, let's just say. $100 is what you're going to risk? Okay. Now you know, Cameron, what your sizing is. Right? Now you know what your sizing is. In the case of the stock, like just the example I said, what did I say? $24.50 is the entry price that you're getting right here versus $25.50 as the stop loss. You've got 10 cents worth of risk on the trade, and you are going to be risking $100. You take 1,000 shares. In the second example, the entry price is $89.50, stop loss is $90.50, and you want to risk $100. You take 100 shares. The amount of sizing is the last part of the equation. You need to know how many dollars you want to risk and what your entry price is versus stop loss. That's the right way to trade, especially at the entry level. Just to circle back a little bit to the Amazon that I was talking about, the reason why this is not a beginner trade, or it's not a trade for someone who has a small account size, is that you don't have a defined dollar amount of risk. That's what makes the trade that I just described so difficult and potentially so dangerous, is that you don't have a specific dollar amount that you're willing to risk on that trade. For me, I just know that based on my account size versus the amount of shares that I'm taking in that trade, that I know that I can afford the risk. I don't know what the risk is in the worst case scenario on that trade. I can't tell you. And again, that's what makes it so dangerous. Could be thousands of dollars. But I know that I personally can afford to trade that. For most other people, for entry-level traders, for smaller traders, it's not appropriate to trade that way. And the appropriate way is what I just described, and that's exactly how you come up with your tier size. Know how many dollars you're risking on the trade before you enter into that trade if you get stopped out. So appreciate the question, Cameron. Let me know if you have any follow-ups on that, and I'll do my best to answer it. And if I don't, we can continue it with tomorrow's. If I don't have time, we can continue it with tomorrow's afternoon meeting. The CrowdStrike trade is actually more of an example of the type of trade that I'm describing with Cameron. The problem with the CrowdStrike trade is it's a very expensive stock, and that's why I don't like to trade these expensive names most of the time, is because you're taking on so much risk. My first entry on the trade was like $260.60, and then the low here is $258.77. So I'm taking on, like a few dollars worth of risk on that initial entry. So $2, I guess, worth of risk on that initial entry. Right? 2, 3? I can't. I'm doing too many things, and my brain just doesn't work anymore. 59, 60, 61. What the fuck did I just say my entry price was? 59, 58. $2 worth of risk on that initial entry. So every 100 shares you take on that initial entry is $200 worth of risk. And then I added a 260. So if that's another 100 shares of an ad, that is an additional $125 worth of risk. So I don't like these expensive names because of that and because of the wide spreads most of the time. But this is an example more of what I was describing with Cameron, where you can have a very defined stop loss. You're putting on that RDR trade after this doji on a day 3 down. You know exactly how much you're risking on it. It's just an expensive stock, so it might not be right for everybody. Caught my move to 272. I was out of the trade and moved on with my life, and that was it. Okay, cool. Yep, no problem, Michael. Over to the YouTube. Guys in the YouTube, I'll do my best here. I really have to go in just a few minutes. Otherwise, we can reconvene on any questions tomorrow. Kevin also giving me the end phase reports. So I appreciate that. I'm actually just taking a quick look here. So they missed on their EPS and revenue, but the guidance isn't great either. Wow, I'm surprised end phase is trading well. What's it doing now? It's up decent. Those numbers don't look good to me. From David Dean, you talk a lot about the importance of maximum loss daily on a P&L. How do you self-enforce this daily? Is it as soon as your daily max loss number is hit that you pull the plug on the day? No, not necessarily. So you should have a daily maximum loss number, and then the important thing is that all of the trades that you have on for that day, if in a worst case scenario, if they all fail, that you are still within that maximum daily loss number. So then it corresponds properly, where if you got stopped out of all those trades, if they all failed, you're also at your maximum loss. So you don't have the scenario that's more difficult of, oh my God, I'm at my maximum loss, but I still have trades open, what do I do? You're not going to be in that situation if you put on appropriate risk on all of the trades to begin with. Otherwise, if that were to happen, then I would say that the right thing to do is to manage the trades per the game plan. But it shouldn't happen. You know, again, you should make sure that you're not putting on more risk in a given day that exceeds your maximum loss. I think where it can be tricky more is if you swing trade and you have positions overnight, because then you have to be calculating how much P&L am I down from those overnight positions versus the new trades that I'm putting on. And the maximum loss, I think, should be based on the new trades that you have on. That's assuming that you're doing an appropriate job on your swing trades, which means that you have an appropriate profit cushion to keep them overnight to begin with, so that those trades that you're swinging are basically still based off the maximum loss from the previous trading session, and any new trades that you're putting on are based off the maximum loss from today's trading session. And therefore you shouldn't have any problems. From Cyril, on the 10 a.m. numbers, the Qs were ticking down, the IWM was ticking up. Did the miss on the housing number also help the IWM? I don't know. It looks like it based on the chart, but I can't conceptualize why. So I'm going to move on, especially again because I really got to go. Would Amazon also be a long trade at the open? Yeah, it could be. I'm nervous to buy some of these mega cap tech stocks right now, just into their earnings report. But I do like Amazon broadly as one to potentially be involved in. So if you had this 185 maybe on your radar or something like that, you maybe could have tried to buy it off the open. Breaking the previous day's high, yeah. From Robert, were you also watching your average price in Amazon? No, I don't. I don't look at my average price. I think average price is a deceiving number. I don't know. Robert, if you want to re-ask this question yesterday, it's a question I could get into a lot of detail on. I don't have time to get into the amount of detail right now to really properly answer the question. But the bottom line is I don't look at average price. I don't look at average price. I don't care about average price. I think it's misleading. I don't pay attention to it. From Cyril, did you put limit orders in for yes, limit orders, and you get that little rebate from the exchanges. Love that too. From Sebastian, what do you think about getting long Spotify in the break of the pre-market high at the open and looking to short meta for a swing? I like Spotify's earnings report a lot. It was on my radar today for a long, but I thought that it opened up a little bit too high. So just from a bigger picture perspective, looking at the daily chart, I thought it opened up too high. If you're buying the break of like this 340 at the open, it's okay. You just got to recognize the type of trade that you're in. It's a pure momentum trade where you're trying to buy the break of this bull flag that was created pre-market. So I don't hate that if you recognize what type of trade it is, and then you keep the stop loss very tight, and then you're booking profit on that break very quickly. Therefore, it's not a losing trade for you, hopefully. And what do I think about meta short for a swing? I like meta short for a swing below 500. Just be careful into earnings. This is exactly where I would look to short it to, in conjunction with what I was talking about the Qs. I'm out of time, guys. Appreciate you guys joining me. Have a great night, everybody. For the people that are in the YouTube, just so you know, I'm doing a big open house next week where you guys can be involved just with the VTF for next week. So look into doing that. There's a good chance I won't even really stream to YouTube next week, just because anybody who's anybody can just be in the VTF next week anyway. Have a great night. See you tomorrow.